With the stock market still trading very dangerously close to all-time highs, with the S&P 500 seeing that there's no signs of stopping yet. In this video, we're going to go over 10 individual dividend-paying stocks that are all offering north of a 4% starting yield, but also are within the S&P 500, which of course generally means these stocks are pretty high quality. Now, like I said, not only are every single one of these names offering a 4% or greater starting yield, which means you're going to get a lot more cash flow from day one, but also every single one of these names are within the S&P 500. So if you want to see which 10 names are yielding north of 4%, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first S&P 500 stock that's yielding north of 4% and that's honestly had a massive year and massive year-to-date performance, we're talking about ticker symbol T, one of my old school favorite dividend-paying stocks, AT&T stock, which is up over 32% in the 1 year and up over 16.3% year to date. On the max time frame though, AT&T still has a lot of ground to make up for. It is technically in the green around 23%, but this is since around 1994. Now, even though AT&T has definitely had its struggles, I've even traded in and out of this one multiple different times. AT&T has a forward yield of around 5.77%, which is much greater than 4%, but keep in mind AT&T did have a pretty massive dividend cut, and this was back in 2022, which to be honest was probably healthy for the company. All that to say that AT&T is having a crazy year and is offering much north of a 4% yield, so maybe it's potentially a stock to add to your watch list. Another S&P name that's yielding north of 4% is one of my other favorites. I've traded in and out of this one also many different times, T. Rowe Price Group, or ticker symbol TROW, which on the 1 year is down around 9%. Year to date, T. Rowe is actually up around almost 4%. Now, max time frame, T. Rowe has done amazing, up around 688%. But what's even crazier is that back in 2021, T. Rowe was trading much north of $200 per share, now basically trading at half that. But with that, you are getting a north of a 4% starting yield, 4.34% to be exact, and some dividend growth historically. T. Rowe has paid dividends and more dividends over time. Now, this is one of those stocks that always seems to end up in my portfolio. Like I've said, I've bought it, I've sold it. T. Rowe Group, as of right now though, could be offering a buying opportunity and definitely worth to have on your watch list. Another one that's in my portfolio as of right now and that has had a pretty good year is KMI, or Kinder Morgan, which is up around 18% over the 1 year and up almost 20% year to date. Kinder Morgan is actually red though on the max time frame, so again, it has a lot of room to grow still, down around 32% on the max time frame. But as far as starting yield goes, investors are getting a north of 5.4% starting yield. Not to mention KMI has also increased their dividends pretty significantly, and this is ever since that massive dividend cut back in 2015-2016. But ever since then, KMI has been paying their dividends consistently every single quarter, and honestly, I personally have held on to this one for a while now, and it's done great. My portfolio has grown a lot because of it, and I've been paying dividends every single quarter. Another single stock that's offering north of 4% as of right now is ticker symbol PRU, which is currently up 28.5% in the 1 year and also up almost 20% year to date. This stock is having a crazy year also, up around 317% in the max time frame, but even still with that all is offering north of 4%, 4.15% yield still, even while the market is basically trading near all-time highs. Definitely one to keep an eye on. It is trading towards the upper end of the 52-week range, so not the best buying opportunity necessarily, but PRU definitely have on your watch list. Another one of my holdings that still is offering north of a 4%, and honestly much north of a 4%, is Ultra Group, or ticker symbol MO, which is up almost 10% in the 1 year and up 23.4% year to date. For a higher yielder, this is an insane performance. Max time frame up almost 900%, so although it is off of the most recent all-time highs back in 2017, this one still has been trading very well and paying investors like myself a ton of dividends along the way. And speaking of dividends, an 8% forward yield is what MO investors are still getting as of today, which is massive, again considering how much the stock has grown over time. Not to mention MO has also been raising their dividends very consistently year after year. This stock all around, as far as higher yielders, is one of the best performers across the board. Another single stock offering north of 4% as of right now is ticker symbol OKE, which is currently up around 22% over the last year and up around 16% on the year to date. Max time from this one is basically trading pretty close to all-time highs, up around 1900%. But even with the crazy performance this stock has had, still offering north of 4.75% forward yield, and on top of that, just like the rest, offers dividend growth historically. We saw some massive dividend growth back in 2017, but ever since then, some slow and steady increases, which investors obviously have loved. Another one that's trading pretty expensive as of right now, but definitely worth keeping on your watch list moving forward. Another 4% plus yielder that's also potentially offering a buying opportunity is Best Buy, or ticker symbol BBY, which year to date's up almost 8% over the last year, up around 4%. Max time frame, Best Buy has obviously done amazing historically. Now Best Buy is offering a 4.35% forward yield, so it's not the highest yield we've seen historically for Best Buy, but still greater than 4% starting. Not to mention this stock has also had some massive dividend increases over the last few years. We're talking like 20 cents at times dividend increases, and even though the recent dividend increase wasn't as large, we're gonna have to see what Best Buy does moving forward. I know Best Buy stock had a lot of changes in the most recent earnings. Now, Best Buy stock has been a stock that I personally have considered adding to my portfolio, but every time I add it, I always think to myself, there's probably better ones out there to add than Best Buy. But still, for those investors out there that want some stability, some strength, and north of a 4% yield, Best Buy is still offering that. Another one offering north of 4% is Hasbro Inc., which is basically flat on the 1 year and up 23% year to date. Now, even though Hasbro has a lot of room to grow to make it to that most recent all-time high back in 2019, this stock is still up around 380% in the max time frame, and where it's trading as of right now is offering a 4.34% forward yield, which is pretty massive. Another single stock that could offer some stability, a nice dividend historically, Hasbro might be worth adding to the watch list. Another single stock name that's offering north of 4% and that's had a massive year, we're talking about the Williams Company, or ticker symbol WMB, which is up around 24% of last year, up around 24% year to date. Not to mention it's up around 170% on the max time frame. Now, as of right now, WMB is offering a 4.42% forward yield, so not the highest yield we've seen, but is there dividend growth historically? Yes, there definitely is. Ever since the most recent dividend cut back in around 2016, this stock has been paying dividends and been paying more and more in dividends quarterly to investors, which could be offering a stable cash flow and asset. It is trading towards the upper end of the 52-week range, just like pretty much everything else across the market, but it still is yielding north of 4%, so maybe check it out. The last one that's offering north of 4%, and this company has done amazing over the long term, we're talking about FANG, or Diamondback Energy, which over the last year time frame is up 42%, year to date up 29%. You guys, some of these stocks have grown so much in the last year. Between you and I think we're going to see some massive pullbacks, but who knows? Now, as far as dividends go, even with the most recent performance, FANG is still offering north of 4.6% forward yield. And is there dividend growth historically? Let's take a look. It looks like there's some dividend growth historically, but also some massive special dividends that have been paid to investors over the last few years. Now, if you want some exposure into this sector, definitely look into FANG. It's still offering north of a 4% yield, even with how high it's trading as of right now. So those are 10 different S&P 500 companies that are all offering north of a 4% starting dividend yield, which as of right now where the market is trading, it is becoming harder and harder to find deals across the market. Now for me personally, I'm more of an investor that just keeps buying high quality assets ongoingly, and I'm not necessarily too worried about finding the best deal here and there. I just like to stack shares, high quality shares of that, as many of them as possible when I get my cash balance in my portfolio, when I get paid dividends, and not really worry too much about price, because I hope that if you buy enough high quality assets, long term the price that you purchase them at will only matter so much. Now, with that being said, I still look for deals throughout the market, and with the market trading where it is currently, like I said, deals are harder and harder to come by. But with the up and coming volatility, with the election, with the Federal Reserve cutting interest rates, I think there is going to be a ton of volatility and a ton of buy the dip opportunities in the next 6 or so months. That's just my opinion. I could be completely wrong, but that's why I'm keeping a large amount of cash balance on the side, ready for some dips if they of course come about. But now lastly, I want to hear from you guys down below across the entire stock market. As of right now, where it's trading, very expensive of course, what are a few stocks that you personally think are still offering potential long-term buying opportunities? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.